It's hard to breathe, but that's alright. Hush.
Hey, what's going on, guys? Welcome back to a new video. Now this one I'm going to quickly go over how to manage your position. So we just spoken about in the last video characteristics of the market, I believe it was, or refining order blocks and imbalances. But this one we're going to be going over managing the position. So if you don't know what that means, it just essentially means, once you are in the trade, how do you manage that trade? Okay, so first things first. So we're going to go and recap West Texas Oil, but a bit more in depth in terms of managing it. So as you can see, we've entered here, and you've probably seen it in the case studies. Managing the trade, all you have to do is mark the lows and the highs, right? So we entered on the 5-minute time frame, so I'm going to manage it on the 5-minute time frame. Okay, the 5-minute and the 1-minute you probably see anyways, but yeah. So pretty much, as you can see here, we got the low, we got the high. Okay, then we broken structure to the downside. We got a low, we got a high. What have you noticed here? Rather than going forward and marking this as the high, that's not valid. We go backwards and mark the high. Okay. Again, what happened is this would have been a break structure to many people, but to me it's not. And we've broken structure here. So this is our new low, and this is our new high. Same process. Broken structure, low, high, starting to expand now as we're getting wider. Low, high, low, high, low, high. Now this is where it starts to get tricky. Okay, so I'm going to use this line tool. So this is the high, broken structure to the downside. This is our new low. We now have a new high. The price do, it came back up and broken structure to the upside, and this is where I entered, close. Sorry. Okay, so that's what you do. You monitor the ranges, and the exact same process applies for every single trade. So if we just take a look over here, right, we'll use this a bit easier, right? What can we see? Say for example we entered here, we have a low. Now I'm going to show you this example because this looks very choppy, but you can see price within that, and you can go to the 3-minute because and if you're in doubt as well, you can always just zoom out. We're going to go to the lower time frames and actually see the structures a bit more better. So I'm going to just stay on the 3-minute. So we have our range here. We did have a previous range, but we broke structure to the downside. We had a high here and a low here, right? This is broken structure to the downside. We got a new low, got a new high. Yeah, you can class this as a high. Broken structure to the downside, got our low, got our high. The downside, got our low, got our high, new low, low, high, low, and our new high. Pretty much the same high as the previous one. And what can you see? We didn't break structure to the downside, we broken structure to the upside. So this is where you close your position. And again, you continue to do this and continue to do this. As you can see here, we got a low, we got a high, create a new low, got a high, price do, closed above. Okay, so you'd close the trade. And that's simply how you do it, guys. All you have to do is just monitor the ranges, all of the highs, the lows, all the highs, all the lows. Again, lows are highs, right? Continue to do this until the price starts to break to the different direction that you initially entered in. So if you're using a sell opportunity and price broken structure to the upside on a smaller time frame, then that's a change of character, and price could potentially go up that way. If you look at this example over here, price didn't, right? It continued lower and lower and lower. Okay, but as long as we follow our plan, that's all that matters. Because I've lost it now. I've deleted all the charts, that's why. I'll go back and sort that out in a minute. But yeah, that's pretty much all you do. You literally monitor the trade, and if it starts to break structure to the upside, in this case, in this example, then it's invalid. And it's up to you. You can monitor it using the 5-minute, the 1-minute, the 15-minute, the 30-minute, the 1 hour. 4 hours going to be harder, but you could still probably see the ranges, right? So for example, a lot of people would monitor this is their low, this is their high, right? To the downside, this is their new low, this is the high, and that's fine. But when you first enter on a smaller time frame, you must note that we're not going to see those hourly structures. Okay, so it's probably easier to monitor it on the lower time frame, and we just continue to do this and do this until price eventually breaks to the upside, and that's when we close, right? But that's a quick example there for you. It's very simple. Again, understand your ranges, and that's all you're essentially doing is just monitoring your ranges. Okay, so other than that, guys, I'm going to end the video here. Any questions about managing the position, just send me a message. But it's actually very simple. As soon as price break structure in the different direction that you're in the trade, then that's the minute you exit the trade, right? And it's up to you how you determine your breaking structures, because sometimes it may come up to wick it and then move in the bearish move that you're initially in the sell position. Okay, so that's why I don't really interpret or use the wick as my sort of breaker structure. I use the closures. Okay, but if it's like, if the candle's moving fast and it's in the fundamental sort of news, and there's some sort of news that's come out, then I probably will close if it depend on obviously the momentum of that fundamental release. Okay, but that's pretty much it really. It's, again, very simple. To monitor the ranges, and as soon as price breaks in the different direction that you were originally in, that's when you exit.